Hey, it's Clay, and this will be a video chart on ticker symbol IVAC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I don't mean to state the obvious, but pretty rough day here, not only from a price action perspective, but you look down here at the volume, and biggest volume this one has had for quite a while. Although from a trading perspective, this creates a very interesting setup. Now, this will mean a little bit more to those of you that have traded for longer periods of time. But if you have, I'm sure you've seen stocks where they gap down, and then after the gap down, the remainder of the day is just simply bleeding upon bleeding, and it just continues on downwards. That was not the case here. Sure, the price gapped down and got beat up, but after that, the price essentially went sideways, and that's where our first key technical level comes into play, otherwise known as our support, which goes to show that essentially the buyers stepped in, give or take, by a few pennies right here around the $4.70 mark. So going forward, that's kind of the key initial part of our setup because, yeah, the price has gone sideways. Now, don't get me wrong, though, and I really wish trading was this easy. Just because there's been a big gap down and the price got hammered and now the price went sideways does not guarantee that this thing's bouncing up to $5.50 tomorrow. Now, would it be shocking to see a bounce? No, that would not be shocking. But myself nor anyone else can sit here and say that for sure a bounce is going to happen because quote unquote for sure implies guarantees. And yeah, there's just no such thing as a guarantee in the market. So with that setup being said, like I said, let's say the price does continue to go sideways, maintain above that level of support at 470, and then does start to bounce. Where are some of these key levels of resistance at? Initial area of resistance, if there is any sort of bounce, is going to be right up here, which actually occurred during the final 30 minutes of the day, right up at about $4.90. So $4.90, that what I'd consider the shorter term level of resistance. If the price can push up through there, then that would be, next key level would be right up at about $5.10. So again, very interesting setup going forward. These are definitely the setups that you should avoid if you're not good at honoring stop losses and managing. You shouldn't be trading anyways, but that's a whole nother discussion. My point is that you definitely need to be very risk aware and understand how to control it. But if you do, then yeah, this could be a very interesting setup and profitable setup. So we'll see how this one continues to unfold. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.